All right, guys, I think I have fixed the audio problem on my system. I have a new computer that I bought in the States, a very powerful new mini computer, which has a built-in AI microphone. And in OBS, I was using my Jabra, really nice Jabra headset. But apparently, it's still using the internal microphone, and the volume was set super low. So I turned that volume up. So it may sound a little hollow, a little like in a well. So give me some feedback if it's too bad. But at the same time, um, it's important that, it's been difficult to exclude the internal one and just get to the Jabra within OBS. So let's jump in. Here's NVIDIA. Excuse me, guys. All right. So NVIDIA, NVDW, all of these funds, all next 20 something of them, now they're getting larger and larger with RoundHill, declare on Friday, 11/21. So if you buy on Friday, 11/21, you will be paid on Tuesday, 11/25. If you wait till 11/24, you'll be paid the following, like December 1, right? The following Tuesday if you buy this coming Monday. So let's jump in. What did they pay? 51.75.18. Call it 52 cents. What's happening here? Well, Nvidia reported earnings was up, looked really good. Then during the course of the day, it went back even to what it was at before. So there's a lot of concern around Nvidia. The circle money, the over writing off of the assets when the life is only about 2 years, 2.5 years at best on these latest, greatest Blackwell chips from NVIDIA. So I wouldn't call it an accounting scandal, accounting concern, and then the incestuous nature of who owns who and AI and ownership and open AI. And so, sometimes there appears to be a lack of customer. And guys, here's the biggest concern. I've said it in a lot of places that the concern on chip is power grid. We've got a 50-year-old power grid and parts of it are only 30. It's old. It's nuclear based because these large AI data centers need base load power. They need no intermittent power, solar, wind. A lot of that's intermittent. When the wind blows, you got power. Yeah, you got batteries, guys. But I'm talking about a major source of power. When the power company says to Amazon, says to Apple, says to other large Meta, tells these companies, no, we don't have the power. You can't build that. You can build a data center, but we don't have the power to support your equipment. They're going to cancel that building of that data center. It's not like you might construct the building, but you're not going to buy all those chips and wait 2 to 3 years for the power grid if they can do it then, because those chips are worthless. They decline by 95% in 2.5 years. In 2 years, they decline by 90%. These are leading edge, super fast chips that only have a short period of life. It's not what you and I buy when we go buy an AMD or a chip, from Apple or something. These are retail chips. These are not AI leading edge chips. So it's a whole different world. So what's going to happen if those AI players, the Metas and the Amazons, and the other companies decide that they can't, or they get told they can't build it so the answer goes back to my commodity super cycle. It's in uranium, right? Driving the spot price up. It will drive it up quite incrementally over the next number of years. There's a deficit of yellow cake. Can the nuclear reactor power companies afford to buy a 2x, a 2.5x and a half time the spot? Absolutely. It's 1 to 2% of their operating costs. Very minimum impact on the bottom line if you double or triple the spot, which we probably will see in this frenzy going forward. So the miners will do well. The problem is there aren't that many miners, and especially the management teams to get these mines in production. So that's the situation we're in. These electric companies, these big power suppliers, they want 10, 11-year contracts, and the miners are like, we can't do that. We'll give you $80 spot, which is about what we're at. We'll guarantee that for a year. Then we want an upside of $40 to $50 beyond that, and we only want a downside of 10. Basically saying whatever spot is, we're going to give you within 5 or 10%, right? But they're showing the upside way higher because they know what's going to, what their costs are going to be. A lot of these miners, they've got minimum $60, $70, $80 extraction costs. And so there's just simply not enough yellowcake, the raw extracted mineral that's an input source. So there's some SMR, new scale, small modular reactor, because it takes 10 years to get a nuclear reactor up and running, right? From the planning phase to permitting. I mean, Trump and the current administration saw this. This hits us hard as a country. And they put $80 billion recently into Westinghouse Electric, Cameco, and another consulting company to put it all together to get these small modular reactors that you can get in 4 to 5 years. But they're only producing about a third of the power that a full-scale reactor does. But you can't wait the 10 years. So you'd rather have small modular types out there producing power than waiting a longer period. That affects a GDP for a country. That affects a lot of things. All right, so 5171. I don't want to belabor all that. I know a lot of you like it when I tell you things that are impacting. So when I show you AMD on here, and I tell you I'm not very bullish on the chips, because with these cancellation of orders coming forward, I think that we've got 30% more to go down on the Teslas and the AMDs over the next couple of months. And AMD's a little less so. NVIDIA's really hit hard. And Avco has a little bit of a hit because they have so many other software companies besides their communication chip. All right. So Tesla. Tesla, to me, seems like they have a lot of technology. Over time, this stuff should get out. Okay. Robotaxi in time. The robots, some fantastic technology around the humanoid robots to do function. As they drive that cost down and put the scale out and it completes all of its functionality, that's something that I could see 5 years out, 10% of the homes having something like that. But again, that's over time because for me, it's the brilliance of Elon Musk. But it's got to happen. He's demanding these huge pay, to play and to perform. So, I haven't looked at that other than it does seem like a lot of money. But at the end of the day, who's challenged things like he has? We wouldn't even have a lot of the things we do without his brilliance. And dedication and hard work when he does. He goes all in, sleeps on factory floors and so forth. So anyway, that's Tesla, right? Down more than it's up. Here's something else I did this week, guys. So I show you, if you're in NVIDIA, for the last 6 payments, you're behind. You've lost $7.18 in NAV and you've been paid $3.05. So then I just took this thing and applied it to the previous thing. So not bad here. You got a $4.04 positive. Here you got $4.13 negative. So after 12 weeks, you're break even. Get more money in a treasury. Okay? So just looking at this logically, here's down 2, up 4. So there's a $2 positive. Look at this. This is brilliantly up almost $12. $11.79, right? So these 6-week periods go up and down. Well, that's called a stock market, right? But when you start trending where this was a big winner, it still is a winner, paid $18.92 since February 28th and is only down $7. So you got 19 to 7, you got $12 ahead. So that's okay. But Nvidia has just been priced to perfection. It hit 5 trillion, bounced back to 4.5 or so. I think it sees 4 before it sees 5. I like their technology; it's leading edge. But the FOMO in the market, and the valuations, how they're priced, there's just not many ways for it to go up. This earnings was a perfect example. And then I tell you about the power grid, right? So otherwise, they would have been deploying even more chips, and now they're facing, which says that this 30 more percent downside is pretty real. I mean, I shorted the stocks, but when it bounced, I got stopped out. I had a 30% return in about 7 days, but I used a triple. I used SOXS. And would I go long on the chips? Now, hell no, right? Bounce back up. If I'd have just ridden that out, like 484, I bought it 323, I think, and stopped out at 4. So, I had a nice gain, and now it's back to 480 because the market didn't believe the earnings, right? They don't have confidence in them. Apple. Not much. You got $2 positive. I don't need to read these. You guys can see them. I spend a lot of time making sure the green one and all the others are orange. You see the yield. It's all there for you. Okay. I'm just going to talk to other things outside of what they pay. A monkey can look these up and see what they pay. People watch this and they want to see opinions, thoughts, and other stuff. Again, I didn't drag these down, and I probably should for the 6-week period. Not bad. So not bad. Apple's just kind of muting along. It's not having the huge swings that some of the other players are having. But that's not bad. I'd rather see that than some of this red. I mean, 967 red. That can be ugly. I'll get back. I'm getting back to doing it here. I don't think Apple's the most popular fund. All right. So this is just ugly, guys. Well, we all know what's happening to crypto. Before it was MicroStrategy. Now it's crypto altogether. I mean, we saw 90,000. If we don't hold this level, 74 is calling very strongly. If we don't hold 74, it's likely to go to 50. I don't expect anything. And I'm not absolutely, it's dead, it's never coming back. I think there's still hope, but it's got to show me. It's got to show me it wants to run. My guess is we see 74 before we see 100 or 110, the other way. Down 16, 17 more, do we get 16 or 17 up? I'd bet on the down. But again, the market's going to tell us. I'm not a prognosticator in the very short term unless I see some real signals. And the signals are more bearish than they are bullish, just to be honest. So this is brutal, just brutal. I mean, you had a $11.50 gain here in this 6-week period. And then you come along in the next six-week period and you lose $20.50. Okay. So that makes the 1150 and 2050, right? You're down 950 over this 12-week because each of these are 6-week periods. And look what happened to the previous one. Normally, let's say this wasn't so bad. It was just down a little bit. Then this is up and this is a down week. But now you got a $19 down week and you got a $20.50 down week. And you only have 11.5 up week. Now, okay, here's your $25 up week, right? But that's the nature of what you're getting in Coinbase, MicroStrategy, Strategy, Bitcoin. right? Very volatile and down. It's not showing me it's digital gold. I like to believe it's digital gold because I know what the commodity super cycle is doing with gold and silver and what it will do. And right now, the central banks aren't buying BTC. They're not saying, hey, we want meme coins, we want Bitcoin. No, they're saying we want gold. They're very conservative, right? It's a younger generation that buys into BTC. I like Michael Saylor. I really was believing that he was onto something. So I've been a little shocked, to be honest. I don't know if it got overhyped with Larry Flint and BlackRock and all the ETFs or what, but that's what the Bitcoin community wanted. They wanted to be deployed out to retail. Well, it got deployed out to retail. So let's see. Okay. I'm open minded. I don't own any right now, but I'm absolutely open minded. I'm not a gold bug where I hate on Bitcoin. I'm just excited that we're in a commodity super cycle. I know that foods and grains and energy and gold and silver and platinum and palladium and copper are going to fly over time, guys. They're going to go to dizzying heights. So if somebody asks me what RoundHill fund should I be in, absolutely going to tell you GDXW. And you can buy some GLDW. So one's on physical gold and one's on the gold mine. Physical gold is going to go up another 3 times, maybe 4 times. I see about 15,000 on gold. Sounds like a crazy number, but I don't think it is. Remember, how do you price gold? You price it in US dollars, right? Well, what's the US dollar doing? It's declining. It's been declining since 1913. Primary reason is we have career politicians. Don't give a damn about you or I or anything else. What can they get, right? But if they only have 3 days in August in the month of meetings, so be it, right? They want you on Obamacare, but they want their own specialized health plan. They really don't give a damn. Most of them. There's some that do. Career politicians are ruin what U.S. is. I don't even jump into this. And just to show you how bad that is, they dug in so deep, the hate across the aisle is like I've never seen before. Okay. What happened to one term? You have a real job, you go there. Politics are attracting the wrong kind of people. For all of you out there that have Trump derangement syndrome and hate him, right? Then that's okay. But what about all the other bad actors that get brought in to politics in the last 10 years? The kind of people that are going to jail or prison or should be. It's ugly, guys. It's just ugly. It's going to lead to a civil war if something doesn't happen better. Sadly, people are so dug in, they only watch their source of the news. So you get your spin, right? And that's both sides of the aisle. And something has to happen to change. But it probably won't until we get to states receding. I'm seeing now the Democratic states are saying, well, we're not going to pay the federal government because the federal government's telling you don't do our national policies, then we're not going to pay you, right? I mean, it's just one of many, many things. This thing is getting uglier by the day, and that drags a nation down, right? So I don't buy into this. It's all his fault. It's all her fault. It's all their fault. It's everybody. We've had both administrations in for 30 years. And the spending hasn't stopped. Trump hasn't stopped the spending. Nobody has. Some spend more than us. Some allow people to come in and get all of our benefits that aren't citizens, right? So each to his own on what they do. I mean, you can argue that to the nth degree. I'm not going to talk to you about politics. I'm just going to describe the evilness that's in the country on politics. It's just brutal. People don't give a damn. They only care about themselves completely. Cross the aisle everywhere. All right. Palantir. So koi is just ugly, guys. I mean, when it wasn't, it wasn't. $20 down, $11, $19 down. Here's a, 24 up. But that is enough to just drive somebody insane. Look at this now. It's in the negative. You're up $22 and you're down $26. You're better off in a T-bill, guys. You just spent 7 months. What is it? 9 months losing money. Now, Palantir, thankfully, still ugly this last 6 weeks. You've lost $9, almost $9, and you made $8.65. So over 6 weeks, you're down a hair, but you're still down. Total return is down. And then here you're up $1. Here you're up $13, right? Not bad. And here you're up 5 or whatever. I mean, so they have a net positive because Palantir is just a fantastic company. But I'm not bullish for 2 or 3 months, probably. It just, I think long term, I really am on Palantir. It has some unique software functionality that nobody else really has. They can do some amazing things. All right, let's get into the ones that are shorter period of time, right? So these are our 5-month stock. We were just in our 9-month stock. So again, I'll tell you when I'd be buying something. I don't see anything on here I'd be buying or would want to stay owning. So Amazon, -5, paid $256. Well, any deal where you look at that, between $250 and $3 of a loss. Another loss, right? This is 12 weeks. So going on 12 weeks, you've been in this fund, you lost money. It doesn't matter. Tomorrow or later, I'm going to compare all of the RoundHill to the same ones. And again, RoundHill beats 80% of the time, have a better total return than the total return from YieldMax. And the only time just about YieldMax wins is when they're down more than they're up. So they don't decline quite as much. But the reason the bullish spurts, they just outrace YieldMax. So buy something you're bullish on and buy it in RoundHill. It's a simple thing. I tell people that all the time. And it's painful. I got more and more people on my Patreon, guys, that are coming to me. You know who you are. I love all of my Patreon because everybody's trying to get right. But it's painful. Change is awful. When you've been an ultra chaser and you've been a misty chaser and you've been a coney and you've been in, this stuff that just has run and run and run and is not going to run much anymore. The commodity super cycle is where it's at. Okay? Different assets, a different game. Guys, it doesn't die in a day. 79 trillion worth in the baby boomer generation. And the oldest, like I have 2 siblings. I have a 79-year-old and an 80-year-old sibling. They're war babies, right? Or soon to be 80. And guess what? Those people have the most wealth in the world, right? Collective. 79 to 85 trillion dollars. And a lot of it's invested in the stock market. And that money that is, guess where it is? It's in 2 or 3 stocks, 4 stocks. It's in the Mag 7. Never have we had an outside. Take Apple and take NVIDIA. You got 16.5% of the whole S&P 500, which is supposed to be this massively diversified 500 stocks, in 2 stocks. Is that a bubble? You better believe it. The 5 trillion that's now 4.5 is worth. Is worth. And that market cap is bigger than many first world countries' GDP, guys. Think about that for a minute. That's not right. That's not valued correctly. That's a bubble. The question is when it bursts. It bursts slowly. It let a little air out, let a little air out, blow a little back in, blow a little back in. And then when it starts down one day, it goes down 50%. You're like, wow. Well, guess what? NVIDIA's gone down over 50% many times on its way up to 40, 50 times its valuation, right? So the time to be in NVIDIA that you didn't even matter about 50% pullbacks was 5 years ago. Well, there weren't income funds around it. There wasn't high yield, but the stock was there. Palantir started at 40, went to 4, right? And now it's hundreds. These stocks have all had splits. But at least Palantir is a billion or less. Okay. So it could go to 3 billion, right? It could triple. You're not going to triple in NVIDIA. I think they see 4 before they see 5 again. They may never see 5 again. But they're a solid company. They may tread along here at 3 to 4 billion for another 5 or 6 years, up and down, grow a little bit. But this massive accelerated growth is not there. It's not going to happen. The world is changing. Yeah, AI will accelerate, but we don't have to pay what we've been paying for. Chinese have showed us that. DeepSeek, other kinds of things. We think everything has to be super expensive, and it really doesn't. All right, so Amazon. All right, Berkshire Hathaway is supposed to be defensive, right? But the markets are only 6, 8% off all-time highs. It depends on which index you're looking at. I don't, is it 10 now? Is it 8? But it's showing me that we're not going to new highs for now. And I don't think we are. Could we? Absolutely. We could have a blow off top and go up 20 more percent and finish the year and everybody clap their hands and all that. And then start in January and go down 30% that month. Nothing surprises me anymore in these markets. But I do know that the insiders, these CEOs, been selling a lot of stock. They're saying, oh my God, right? How many billions can I have? Well, they can have a lot. They do have a lot. It's just how much risk. If you've got 100 billion or 50 billion and 85% is in your company stock, you probably want to dump at least half that. That's a lot of shares on the market. You don't want to become a 10 trillionaire if you're a 100 trillionaire. I don't know their wealth, guys, but I mean, it's billions. Sorry, I don't think there's too many trillionaires, but you know what I get at. Having 100 billion is a lot better than 10 billion. And when you get to a certain level, it is FU money. It's just money that, because the money is going down in value. That's what we all face. Why do you think you guys are so keen on what these yields are and everything? But if it was that simple, people wouldn't do growth. If you could just go out and get 50, I'll give you a perfect example. 1979, 1980, I was working out of college. I remember my boss, a woman, very smart lady, took a day off. And I said, oh, what did you do yesterday? You don't normally, take a day off. Like, well, I had a lot of silver, and silver was running in 79. I have a lot of silver that I got from my grandmother, and it's worth so much money. Right? It was like silver was $4, and then all of a sudden silver is $50, right? Beginning of the decade. And she's like, I'm going to sell it, right? I don't use it anymore. It's just something there, but it's worth a lot. And so she went and sold it. And I remember that. I remember people talking about it. It wasn't a lot in the stock market. I dabbed and bought a few things and didn't really know too much of what I was doing, but I still was in it. It was only a few years later that I went and took options courses and learned options. But so I watched in history later that entire 1970 to 1980, 71 is when the gold really started to move after the Nixon situation, of not tying gold to the dollar anymore and set it free. And gold went to 850 from $35. I mean, it's a massive run. And then silver did that big spike with the Hunt brothers. But, these things happen. And then that replay came about again in 2001. So we had a repeat. Again, history doesn't exactly repeat itself. It just often runs. So we repeated that scenario again, guys, in 2001 to 2011. And both of those commodity super cycles are incredible. Oil moved in both of them, right? Massively. Those of you that remember, you remember 147 oil. You remember Lehman Brothers and the mortgage crisis, defaults. And it was awful. The metals got hit. Gold went down from $100 or 100, went down from 1,000 back to 700. Some of the gold miners went down 50, 60, 70%. I remember I was playing them like crazy, right? In that whole 2000 decade, because I lost so much in high tech and incentive stocks I had at EMC that I worked for 10, 11 years. And all of a sudden, in 2000, it's like, oh, okay, we got a dot-com crash. It went from 5,000 in the NASDAQ to 1,500. It took us 15 years to ever get back. And that's what commodity super cycles, that's what the bust, be it a AI bust or a dot-com bust or, booms turn into busts when they run crazy, crazy high. That's why I worry. I'd rather see us retrace 20, 25% in the indexes and then go back to, slowly go up to some new highs, but not the crazy FOMO we've seen. So I talk a lot about that over in my Patreon. I educate a lot. I'm doing it here because I don't do a lot of YouTube, honestly. I'm catering to my Patreon base, consulting, helping, talking, strategizing, talking to them about the things they can buy that are different from what they've been buying. The definition of insanity, keep on doing the same thing. Keep on investing in Alti, keep on investing in Misty, right? Or whatever the new fanboy is out there telling you to buy. I saw the spokesperson, Jay wants to hide now. So they hired a spokesperson, send him to CNBC, send him on the favorite YouTube, right? The fanboys of Yieldmax. And have him tell you, well, now it's targeted funds. They go back and they find one that's done decent. Well, yeah, because it's not paying massive yield. But I would say whatever it's targeting, semis. Okay. So you got a semi one that targets a lower yield. Well, that's great. Semis just had a great run. What did I tell you about semis? They're down 10% and they're probably going down another 30%. Good luck with that play, right? Over the next 2 or 3 months, however long it takes. Maybe good after that, right? But that's yesterday's news. But they go on a week or two ago and say, yeah, we think in a target you're safer and look at the performance of this. BS, right? They're just telling you what you want to hear and they're trying to pick a bright spot. I would do the same. If I had to be that spokesperson, that's what I do. I try and go find something that's been decent. But I'd probably have a little more empathy, right? I'd probably say, hey, get in BRKW or get in, whatever the equivalent, BRKC. I forget what they call it on yield. Because at least it's defensive oriented. All right, guys, I keep going. Here's your new stuff. Good. This is a great one. You guys know I talk about it a lot. I've had to eat a little crow. I said I didn't think the IP was all that great. And that was, a year ago, 9 months ago. I never said it wasn't going to go up. I just said I don't think it has the IP, the intellectual property. I don't think it has a uniqueness to dominate as a retail broker for 10 years. It's not an NVIDIA in the chips and the graphics chip. It's just a retail broker that's popular with Gen X and millennials, okay, and maybe boomers. I don't know. I don't use it, but the phone-oriented people. And so, sure, you can lay in bed. You can sit there. You can be in a meeting. You can check your phone. You can do something. Okay, but most of the brokerages have that. But besides, they did some unique things. They catered. They created policies. They helped people get started. And they were rewarded with a loyal fan base and a lot of people going over there, right? A lot of the crypto kids, right? And I say that in kids. I live in Asia. In Asia, the 20 to 35-year-old population, anybody that's worked and had some money, I'm talking about the dead poor people, right? I don't mean dead. I just mean deadbeats or they are not working yet or they're students, right? Unless they're rich with a family, they're not doing crypto. But as soon as they have a little bit of money, they're doing crypto. They're trading crypto. Well, that's all great in an up move, right? The 3 years you get higher highs than and higher lows. What happens when it turns? But that's why I talked to you about a commodity super cycle. We got 5 more years, guys, maybe 6. That this thing's going to have higher highs and higher lows. What better can you have, especially in an income fund? So now, Hood, guys, you're getting your comeuppance. Not that it's a bad stock, right? It's not. It's a good stock. I just don't think it's a 5 to 10 year play here and just up at all. I think it could retrace all of what it's gained in the last 12 months, potentially. It all depends on what the market correction does. But it's just been phenomenal. But look at this. Those are also the most vulnerable. That's $30, guys. You lost $30 if you were in HOOW over the last 6 weeks. This is 6 weeks. Now, you made $32 here and you lost 36. Okay? So now for a 12-week period, you've lost $4. 32, no, that's 33. That's okay. So $3, but you still lost. Your total return over the last 12 weeks is you lost $3. That's not good. Treasury, you don't lose anything. Okay, so you guys always have your eye on these big payments, these big yields. Look at it, and they had them. $1.58, $1.04, $2.22, $1.08. You'd think over 12 weeks, there's no way you can lose anything. Oh, yeah. Look at this. You were 70.8 and you're 48.8. Guys, I got news for you. That's $22. You lost $22 in 4 weeks. It's brutal. And now, over the entire period, now, if you hadn't been paid so well, you were. This is where it comes in. So since, for 5 months now, you've made $28.37 and lost $9, right? So you're $19 ahead. That's okay. But understand these. If you're going to do this in the markets and you want to make money and you run and run and run, you better own some defensive. Go out and buy some insurance. Go out and buy, a one bear put ETF. Maybe you only buy a third of your portfolio value in that, or you buy a 2X and you buy a third of your portfolio so that you keep getting the income. But when this goes down, something else goes up. There's all kinds of things. It's stuff I'm starting to do on Patreon for people. I'm doing it in the gold miners. I do it in I teach options over there. I teach people, a 3-hour course of 1 hour each to teach options. And when I teach options, it's strategies. It's not just, hey, here's how a call works. Here's how a put works. No, we sit down and look at charts on stock. I try and get an edge whenever I put an option trade on. Because if you don't, 90% of call buyers lose their money. And there's a reason, because they don't time the market. You do need to time the market when you do options, okay? You don't have to time the market in a terrific bull market. You can just buy a growth stock and it goes up and down, but it goes up more than it goes down and you're ahead. Now, in theory, I guess you can go out and buy a leap on something if it's a real bull market, but I still like to time my leap, right? I want to time my leap when that stock is really pulled back, right? When I had one of these, I had a 9 back or a 7 back, but then I still have to look at the chart and see, does it likely have more downside? What are the technicals? So, fundamentals tell me where to buy, and the technicals tell me when to enter and when to exit, right? And then when I got a commodity super cycle as a fundamental, I'm like, oh my, I'm happy as hell. I'm excited, right? I watched gold go up for a year and the miners didn't even move. So until the miners moved, we didn't have a commodity super cycle. We just had the fear of gold going up. But once the market couldn't ignore it, and guess what? All of you guys out there listening, or a lot of you, because a lot of my Patreons still listen to the channel, you guys aren't in mining. Shame on you. Shame, shame, shame on you, right? I just showed a chart last night to my Patreons. I said, okay, 1 year, year to date or 1 year, you're up over 100% on the gold mine. You know what you are on Bitcoin over the last year? You're down 20%, right? Now, the S&P over the last year is 15%, or NASDAQ's 15%. The S&P is 13. The Dow's like 6, but 102. And I expect that to average 50 to 70% over the next 5 years. Because we're in a commodity super cycle. The metal goes up, the miners have leverage to the metal. So guys, it's talking about where to put your money. You're putting it by looking in the rearview mirror. You're buying the dippers, right? Because it always worked. Maybe it'll work in Bitcoin in 6 months or a year. I hope so. I think it will. But if you ask me in some of the FOMO stocks and the AI, I'm not so sure. There'll be a few winners. I think Palantir, given a year or two, will be up and probably up substantially. But only a handful of the really good ones. The FOMO where they all just fly, no way. All right, let's keep going. Meta. Down big on their last earnings a few weeks ago. Down $10 here, guys, over the last 6 weeks. Down $1.50 in the previous 6 weeks. That's $12 in 12 weeks. That's not a way to build wealth. That's not a way to get ahead. Okay. And then you had a 250 gain. That won't cut it. That neutralizes this, right? But it doesn't account for this. You don't have any other big wins. So look, you're down twice what you're up. That's $19.14 if you doubled it, right? And you're down 19.40. So you're down 2 to 1. Not a way to gain wealth. Netflix, which used to be a good income fund in 2024. I remember it when it was Netflix. There was no, RoundHill. It was a consistent performer. Well, it's not anymore, guys. Struggling. And that's competitive nature of the markets. That's why I say like RoundHill when I was talking about Hood. What is it? It's a retail broker. There's a bunch of those out there. Okay. So somebody will buy them if they get too far ahead of the game. Some bigger bank, some bigger retail brokerage will just buy them and assimilate them in. And now they're one part of a bigger company. So they no longer an independent company. And so they get taken out of the market. It happens all the time to the world. So retail, right? NVIDIA doesn't just get bought by a bigger company. Who the hell can afford to buy NVIDIA? It was a 5 trillion market cap. Nobody is close to that, right? Maybe 3.5. Now it's 4.5. So you get what I mean. And you weren't seeing that in Hood. They weren't so big that nobody could buy them. But they were tremendously successful, and I get the momentum, and everybody, they're the next NFT, and they've got tokens for this and tokenization. You're just talking out your ass sometimes, right? Let it materialize. Let it develop into the wealth that you're talking about, and not just the FOMO. That's FOMO talk, right? I mean, I was trying to tell people about the miners 6 months ago. Look on my YouTube channel. Look in May and June, right? The only playlist I ever made for the channel. I made about 10 or 11 videos on miners and metals. And I said, why? Talked about commodity super cycle. Talked about what was going to happen. Almost all those stocks are up 100% I talked about. And within 3 months, most of them were up 50% or more, 70%. Sure, that some of them have retraced, right? Even in Patreon, I got some people in. Look, the high was October 16th, the metals and the miners, right? The metals pulled back 10, 12, 15%. The miners went down 25% because miners have leverage. So on the downside to the metal, they go down more. When the metals turn and go up, they go up more. We have a lot more up ahead than we have down. So I don't even, to me, I've been in the metals and miners for a year now. So I'm massively up. I don't like it. I'm down from the height I was at. I had some defensive plays in there. I bought some J dust, right? But I don't want to get stopped out either. I don't want to sell because something drops 18% and it's one of my little speculative miners. I don't care. I'm in it for a 10 bagger. Drops 18%, it means nothing to me, right? Some of them up 300%, 400% in a year. And I want another 8 to 12%. 8 to 12 times. You know, meme coins, you Bitcoiners, right? Your cryptos, you chase that stuff. Well, you got to be in the right cycle and the right time. The difference, what is the real value? A gold miner doesn't do that if it doesn't own something physical. You own gold or you produce gold, there's no counterparty risk, right? It's not speculation. It's speculation when I buy one that's barely pulling a little bit of gold, but it's drilling and got great mineralization and it could fly. Because saying, geez, it's got maybe 1,000,000 ounces when it goes into production next quarter. Well, 1,000,000 ounces, its cost to dig it out of the ground is $2,000 an ounce, and they can sell it for $4,000 now. Maybe in a year, gold will be 5,000. I sure think it will be. So all of a sudden, it's geometric. Gold goes up $1,000 from 4,000 to 5,000. That's a 25% increase. But the miner that digs it out of the ground for 2,000 had a 2,000 profit at 4, has a 3,000 profit. So their profit went up 50%, but the metal only went up 25%. So they have leverage to the metal. So they're printing money. And that's what you have in a commodity super cycle. And they run till the world gets a little better. And it's not, gold is going up because paper money is going down. And in the commodity super cycle, all the things that we consume, that we need, not the BS stuff, but stuff we need, foods, right? All of that goes crazy, right? And when it's a monetary metal like gold or silver, it goes crazy because the paper goes down. All right, guys, keep going. Microsoft, not impressive. Down $5 more than it's up about $1. Even on down a penny. So where are we overall? Page 683 and they're down. Is that a way to make money? No, and it's not RoundHill. Again, they beat YieldMax 16 of 20 common funds. Don't even get me started here, right? Don't even get me started. I told people for 5 months, 5, don't buy any MicroStrategy or now strategy defined Bitcoin funds. The underlying is MicroStrategy, avoid it. If you really want to be in crypto, go buy something on IBIT, Bitcoin futures. And now that's even turned down, Bitcoin altogether. It was strategy. For a while, strategy used to have a premium. Look, I tell this story. I'm repeating myself, different videos over on Patreon, and I'm doing it here. Michael Saylor, loved him, think he's brilliant. Hopefully, long-term, he gets his active. He's been buying Bitcoin relentless, right? He has a passion, he has a story, and he hasn't changed the story. But right now, his story's not working. So take his wealth and take his treasure. So his average cost now is 74 thousand on Bitcoin. Well, Bitcoin's 90. So he's got a $16 profit, right? Per Bitcoin. So add up all of that money. Do you know what his return now over the last 5 years on all those billions that strategy has put into Bitcoin? If you average the gain as a percent for 5 years cumulative, it's a little more than 5%. He'd have been better off in a treasury. He'd have been better off in gold. Gold's up 150% over the last 5 years, 180%. So it just, and look, things change, they shift, but we're in a commodity super cycle. I don't know if we're just in a winter, we got another 2 years, we got another 3 months. I don't understand it enough. It doesn't have 2,000 years of history. I can't go back and look at mankind and look at this decade and that decade. When we had the last commodity super cycle from 2000 to 2011 or 2001 to 2000, there was no big. Okay, so everybody said gold's dead. There's a new digital gold. Well, it's not acting like digital gold. Why are the central banks buying gold and not buying Bitcoin? Why is Tether wanting to attach to gold? And I'm not saying one has won over the other. I hope for a lot of people's sake that crypto goes on to 250,000 or a million. Okay, and it might. I can't tell you that it's not. I have no interest in the meme coins. If that happens, I'll continue doing. I still own some Bitto right now, small position. It's fine. I'm still up on it. I don't care. It's a minimum. I like owning a few little fringe things that sometimes I don't even think are going to do great. But 85% of all my wealth is in the commodity super cycle. And the biggest portion of all is in physical gold. And that's not the most lucrative. I've been thinking about selling half and going into the miners because they'll do a lot. But guess what? There's no counterpart. If the stock market gets attacked and goes down, initially, gold stocks will go down, just like regular stock. And then all of a sudden, people are going to say, but they're making money. Why are you selling that? Well, because they had a margin call. They had to sell all their bad crap. And then in order to do that, they sold the gold or the gold mining. The gold and the miners will do very, very well. But that physical, I sleep well with that thought. Because I don't see the price. I don't feel the price every day. But when I look in my account, right, and I'm up multitudes of percentages. I bought my physical gold years ago, and my monster boxes of silver at much, much lower prices. So I don't have that. So I feel good about that. I have a connection. And from what I see, I got another 3 or 4 bagger in those metals, probably a 5 bagger in silver in the next 5. But I won't be selling it because it's my counterparty risk to the paper currency on what it's going to buy. If you look at history, gold's always, I measure buying a house. How many gold ounces does it take? And it jumps up and down through time. How much does it cost to buy a really nice tailored suit on Savile Row in London or something, right? I'm not talking about running to Hong Kong, and you can always get better prices in Asia and that kind of stuff. But buy what's considered the premier suit maker in cloth and clothing, okay? An ounce of gold's always been able to do that. And I imagine at 4,000, you can get a nice custom suit. So there's just things that hold value because the paper money declines. People hate gold. I mean, you wonder when it's flat for 5 years, boring as hell. You didn't earn any interest, but then, baby, when it runs, look out. Just like Bitcoin. Bitcoin's not paying you any interest. And I know they have all these schemes now to lend your gold out, but that's what I think of them. They're schemes. Nobody's touching my. I'm not interested in leasing it, giving somebody else the rights to hold it. No, thank you. Okay, just brutal on MicroStrategy. Look at every single one of them. $10 loss, $2 loss, $15 loss. Add all that together. Boy, MicroStrategy you've done really well for 5 months now. You're only down $29, $28. Wow. Just brutal. And look at Andy. And, not RoundHill, I'm sorry. RoundHill's AMDW, and not Yomex's Andy. But this thing used to be big over here and big over here. You still have a win, but look how ugly it's got. And I called this, guys. Told everybody what I was doing on stocks. 40% pullback in the chips. You can see it in the charts. There were 3 times, okay, in the last 5 years that the SMH, the chip semiconductor index, got extended over 100%. It was right about 102. 2 times previously, and 2 weeks ago we hit the 102% extension. Keep hitting all-time highs in the chip. It's the FOMO, man. That's the foundation of AI. It's going to the moon. And AMD was running like it's going to the moon. NVIDIA was running like that. It was going on to a new high in a $5 trillion market cap. Unseen, unheard of, right? Bigger than many countries in the world. GDP is what their market cap at $5 trillion. And then started down. NVIDIA gave its prime best effort to show the best earnings possible. And after hours, it went up. But at the end of the day, the market didn't trust it. Big institutional money started selling. They're not buying it. There's too much, circle revenue, favoritism among the players. I did a video on to my Patreons on that. And told them why I'm concerned and why it's topping and why. So the technicals told me it was time for it to retrace. The fundamentals told me the gig is up. There's incestuous, you buy some, I'll loan you the money to buy. There's that. And then there's the power grid, the top thing. They can't build the data center. They can't keep the chips because the data center can't get the power. So guys, this was just a no-brainer to go out and short SOXS. That's how I did it. I could have bought options. I just decided to use a triple bear fund. Because guess what? I bought it for $3. That's why. Hell, my option would have been more than that. So, there's just opportunities present themselves. And it's not easy in the markets, guys. You guys that are working and just need extra income, you throw your money in, you check what the yield is, you look at the payment, you start collecting some, and you feel like you're a genius. Well, the market doesn't work that way. The market's brutal. There's a lot of really bright people. There's super algorithm computers. There's all kinds of stuff that just can't wait to suck your profits and take them from you. I hate it when I sit down and talk to people. And they're saying, Bruce, I'm down this, right? They're emotional. They're upset. Nobody likes it. Been there, done that many times. I made those mistakes, not in the high yield funds because I'm well into my career. I was getting $40,000 a month for a while on Misty and Coney together, and I was excited. But I knew better. I knew it wasn't sustainable for the long run. It was fun while it lasted, going from 20 and buying it initially, having it run to 40 in 3 months, and I'm like, oh my God, this is the greatest thing since sliced bread. But, I knew deep down. And then after watching it for a while, I said, no, it's only capturing a third on the upside. Screw this, I'm buying MicroStrategy. So I started buying MicroStrategy and writing some of my own calls. It's very expensive. That 10-for-1 split made it possible, right? It was like 1,000, 900 and something went to 190 or whatever, the 10-for-1 reverse. It needed that, right? And that's great. But there's a time for that. But people who thought that, you got all your money back in 8.3 months. And then there's those house money people that run around, the YouTubers, right, the fanboys. Oh, I got all your money back in 8.3 months, a free ride now. Oh, really? It's free. So it was worth, let's say it got back to 20. You got all your money back. Okay. You got all the dividends. Well, at 20, you're getting maybe a buck and a half, right? In payment a month. Remember, it was still monthly. And so you're going, okay, I'm getting income. But when it starts going to 18 and 16 and 14 and 12 and 10, is that the best place for your money at that point? Would you have been better selling 20 and gotten your true money back? You got all that money in dividend in 8.3 months. Now you're, say, 15, 13, whatever months, and now you got more money. But you pull the plug and you put it in something that's going to do that. So that's why I tell people on the commodity zoom, yeah, you're selling some of these things and all. It's so hard to just pull out. I bought Misty at 34 and it's 9. I don't know what to do. I understand it. I'm not making fun of anybody. I feel the pain and the empathy. I've been there. Been a long time. But I have losers now. I have wrong. But I get out of those and I move on and I don't fester on. You just have to say to yourself, it wasn't meant to be. It's not always going to be that. And go in something. That's why I tell people on the commodity super cycle, my God, get in. You will be very grateful. And guess what? Those people that bought on my Patreon in May and June and July are really happy. The few that bought in October, as soon as I tell them and explain, look, I always say when you buy, whenever you buy, 30 days from now, you might be down. 6 months, a year, 2 years, 3 years, you're going to be massively up. Get right and set tight, right? If you bought NVIDIA 5 years ago, get right and set tight. Let it run. It had 50% pullbacks along the way. That's all they were. Buy the dip. But I don't think that's the scenario. I really don't. All right, guys. AMDW, AVGW, it's held on. A little bit more negative than down because they got a lot of software in their pump. They were Broadcom and they were known for some hardware besides all their software. They have a fabulous chip in communication that nobody really has. So they're like the dominant player. So they're a chip, but they're not seen at the same level that the Microns and the AMDs and the TSMCs and especially NVIDIA with their graphics, right? So that's not the dominant part of their income. So they haven't been hit quite as hard. I was expecting, they were here, but they had a net positive month. And this is pretty good, $4, $7. So it's a little down, but overall, I'll take 12 and 56. I'm worrying a little bit about the chip. Let's see. But again, I don't think the chip is that dominant. Now, Google, this is popular. GOOW, right? What's the rumor out there? I'm sure it's beyond a rumor. There's fact. Warren Buffett invested in. He saw something. So you can still take a Mag 7 and say, hey, this one's different. This one hasn't been at the top of the distribution list. Kerr's got one. EOMax has got one. Those are not your high flyers. So there's something that, Buffett's a long game player. He's been out of the markets for a year. So he took his, $80 billion and put it in cash. Imagine he's getting a good payment, even if he's earning, 5%. Can you imagine 5% on 80 billion or any billion amount? That's still a lot of money. But he'd rather do that than lose money in a lot of this. Now, he can't time the market. Nobody can time it perfectly. I try and tell people, move over the commodities. Well, wait, I want to try to get even in this. You might get even, but you probably won't. Especially some of these Navi rotors and the EOMax ones, the granite ones, when they turn, they're brutal. RoundHill can be brutal because that leverage on the way up can hurt you on the way down. But why in the hell would you be in anything when it's bearish? Okay, I get it. You bought it as bullish for a month. Now for 3 months it's bearish. No. After a month or two, get out. Shop these babies, trade these babies, right? I know you need income. Take half, put it in. I did that all the time. Pulte was my favorite before there was a PLTW. And then those bozos over there, led by Jay, wouldn't pay out. When forensically I did the accounting and they owed $7 and they weren't going to pay it, and it paid $2.50 when it should have been paying another $7 payment. I said I vote with my feet. I went over to PLTW, best thing I ever did. Because with their leverage, when PLTW moves, it moves nicely. Now that we're under pressure in the AI and the big tech, yeah, it's going down. But when it runs really well over there. So did HOOW. They outperform Yieldmax in any kind of an up market. They're capturing 50 and 60% of the upside. Yieldmax is capturing 33 to 35% of the upside. It's not a same game mentality. But they're both catching, Yieldmax is catching 90 to 95% of the downturn, and RoundHill's maybe doing 98, 99% of the downturn. But you want to be in something bullish. So go buy GDXW, guys. Especially when we turn. And once gold goes above 4,400 and starts its ascent to 5,000, 6,000, 7, and 8, and so forth. And silver does the same thing. Go buy SLJY, right? Amplify. They had a 12-year fund, SILJ. They write it on SILJ and a few of the large cap silver stocks. And they only write on half. So using a strategy where they're leaving some opportunity for NAV increase, and they're targeting around 20%. So the yield is going to be lower for you yield hogs, but the NAV gain is going to be greater because we are in a commodity super cycle. All right, guys. So let me finish this. Let me wrap it up for you guys. COSW Costco, nothing to write. I like Costco. A lot of people like Costco. Great place to shop, right? Look for, one-off items, one-time things, as well as, no questions about that. Well-run company. Uber, it's kind of hurting. Look at this. This is the state of the economy. People get on the bus before they want to get on Uber, looks like. 880, that's ugly. Short period of time. This isn't particularly great. It's $2 negative. But again, very short, but still, it's indicative of the market. Look at ARM. ARM's really ugly right now. I like their technology. But what are chips? They're a chip, guys. Chips getting beat up. Even Babel, I've often said Babel is cheap on its PE relative to the Amazon retail portion. Most of you know that Amazon has its, everybody knows about them as a shopping place, online shopping. But few, unless you're in the industry, understand AWS and the massive revenues. They're the largest cloud outsourcing company. A lot of your big corporations no longer have their own data. They deploy all their applications on cloud infrastructure out there, data centers, if you will, in the cloud. And they lead that. Microsoft's very big in that with Azure, right? Oracle has some of that. Google has some of that. So there's some other players, but the giant or the biggest is Amazon, AWS they call it, and Microsoft. They're a close second. So they buy a lot of chips. They build a lot of data centers, right? And these guys are Alibaba, the underlying, is a Microsoft, is online retail. Who's got more people in the country, in the world? Well, China has a lot. So the PEs are half of what the relevant PEs in the US are. But it doesn't mean it can't go down, and it did, right? But to me, over the long haul, this represents more value. It's a little more defensive. Would I run out and get a big position in it? No. And here we go, guys. Some of my favorites. Maybe it's running from me because it knows I like it. It's hiding. All right, so GDXW. Here's my 1020 on, right? So down, this week. Clearly, I mean, all you have to do, this launch was just about timing. The only thing worse could have been it came out on 10/16, 10/17, 2 weeks before, because gold, silver, and the miners all peaked. But after massive gains, guys, I'm talking about a run that was unbelievable. We needed a rest. Like I said, 10, 12%, 15% on the metals, 20, 25, maybe 30% on the miners. But we have an A. Any retrace, a lot of times you get an A wave down. We finished on the B bounce, and now we're starting on the C. So, we're down at 49 on silver. Silver was 54. Gold was 44. We're back to 4,000. So in the A wave down, gold went to high 38, low 39. Silver went to like 47. So I've got targets out there. I'm not going to give it all away over here, but that's what I do on my Patreon. I show all the technicals, explain all the targets I'm looking for. What does that equate to on GDX? So this is still a positive environment and a relatively down retracement cycle. So when this thing turns up, right, and you got leverage, this is going to look good. I hope to snag some of this. If I can get some 47 or 46 on GDX, and we could, I'll be buying it all day long. And I mean on GDXW, that's 46 and 47. We're like 70 on GDX. But I do correlation. I teach my Patreon people, I say when you see this level, whatever level GDXW is so new. But it's based, all of its options and everything is predicated on the underlying. So don't buy anything. You're not bullish. Well, I'm as bullish as I can be on gold and silver miners for 5 years. Higher highs and higher lows. But that does not mean, on GDX as an underlying, we hit, I think, 85.91. We've been back below 70, and we could get shoved down to 65, 63. I'd be buying massively there. Probably buying call leap options as well. Maybe even selling puts and using that money to fund that. So I teach options, I teach strategies, I teach a lot of things. And with the commodity super cycle, I'm expanding my tiers. I'm doing more things over there. If you haven't come over and visited, come over and check it out. It's worth your while, guys. It's the place for upcoming. I've rolled out some commodity plays. Just you buy a company, they're into commodity. I got one that I'm going to put out this weekend. I got a commodity play that in the last commodity super cycle, it went up 4 times in 3 years. I think we're positioned for that. So I'm talking about large company. It pays a 5.9% dividend. Who cares? Once a year. But if you own it and you go up 4 times in it, that dividend then becomes, because you own the stock, lower, like 20, 22%. Okay. But I'm not buying it for the dividend. I'm buying it for the 4X because it's skating exactly in the arena because it had all these companies underneath it in the ETF that are all commodity oriented. So I love it. Just couldn't be better position. I'm going to do a write-up on that and link. I got 2 oil plays that I love that are 17% distributors, yielders in oil that I also think are 3 or 4 baggers in 5 years. How the hell are you going to get an oil company? Exxon, which is an excellent oil company, you're going to get 4%, 4.5%. And it might double. It might go up 2.5 times, but it's just so massive. It's hard for it to go up 2x. But you start getting into number 12, number 13, number 11, best oil company, market cap oil company in the world. And you get the right one, you get the right yield, then you can get a 3 or 4 bagger. You have to understand the charts. You have to look at the commodity super cycle. I got really high oil prices, record high oil prices that I see within 5. It's all part of the commodity super cycle. Oil typically lags gold by 18 to 24 months. So by January, we should start the first quarter and you'll start noticing, why is oil set up? Why is oil going? There always seems to be the conflict over here, this, that. But the truth is the commodity super cycle is happening. Real things cost more money. Governments are printing more paper because they have more debts. And there's inflation is not really going away. We may not even get a rate cut. I hope for the sake of the country they do and they stimulate the market a little. But it's not going to change the dynamic. We're screwed. Any way you look at it, inflation's not going away. By the end of this decade, we'll be looking at the 1980 interest rates, guys. So if you make wealth in this commodity super cycle, go park it in a 30-year, 15-year treasury. Now you got some wealth. Now you got a 15% return. It's locked in for 30 years. If rates go back in 10 years to 2%, who's the winner there? You had that opportunity in 1980. I didn't understand what I understand now. I didn't have a lot of wealth today, but I could have parked some money. But I wasn't thinking it like that. I bought my second real estate. I bought my first rental, 1980, almost the beginning of 81, late 80. And you know what happened? It was a new building. The builder went out. Mortgage interest rates were in excess of 15% fixed rate. They weren't offering variable. Even if you got a variable, you were paying 15 now, but they weren't. They were offering fixed. So the builder went to the bank and negotiated a 5% buy-in. So the builder paid the interest above the 11, and I got 11% fixed for 5 years. And then the requirement was I had to go get and finance. Again, it was my first purchase. I was young. So, the second because it was a rental property. But the same story. I was young. It was a year after I bought my first house. So it was, you have to understand that history doesn't exactly repeat, but it rhymes. This particular commodity super cycle matches much more the 71 to 80 commodity super cycle run than it does the 2001 to 2011. But that doesn't mean, so I do some analog charts. I overlay where we are. Again, we're at the bottom of the third inning, guys. You people that are listening to me that aren't in Patreon and don't believe this, you're just here to see what, RoundHill's paying, and you can't wait to buy more AMDW and all of, HOOW and all of that because you think that the FOMO and the Mag 7 is going to go on for another 5 or 10 years and you need the income. Then you guys are going to miss out and you don't care about all that. That's fine. I'm just saying. Prove me wrong. Show me something I've said that's completely wrong, right? You can't go look at my gold and silver miner videos. I was saying it before it was popular. So my point is, the public doesn't get it. When things are changing, most people's insight isn't there. They're busy in the work. They're busy with their kids. They're busy in a relationship. They don't see the topping pattern. It doesn't just drop one day and it's over. And somebody declares there's a commodity super cycle. The commodity super cycle's been building, but the FOMO hasn't completely stopped, and it won't until people start seeing, I was just looking at the S&P, the top 8 of the top 10 are gold miners. Well, guys, by the time that happens, it's the 6th inning or 7th inning, and you run over and FOMO in, and you're enjoying the 8th inning, and it gets to be the 9th, and you're saying, to the moon, right? And then it crashes. And me and all my Patreons have been selling you all the shares you're buying in the 9th inning because we're getting out. So this is the way the market cycles work. Capital rotation happens. Those 79 trillion in the boomer generation, those that are really wealthy, they have financial people. They have hedge funds advising them. They're paid people. They've allowed them to be in Amazon and Nvidia, and Apple, and have their money there. Even those hedge funds now are saying, this is different. They know. They're smart. They're like institutional money. They're going to be advising their clients, and they're going to be loading up on the winners for next year at the end of the year, so they can go tell everybody, oh yeah, I was in gold miners, I was in oil, I was in this, right? So that at the end of next year, when their portfolio looks good, they say, see, I knew all this. But they're also taking those numbers. We only need about half. Look, all the market cap of all the gold and silver miners that exist is less than half of the Mag 7 company's market cap. Just one of them. So if we get 1% of the money that's in the Mag 7 and it comes over and flows into gold and silver, that's going to drive it up massively alone. And guess what? Up until last month, GDX in North America had retail decline. In other words, there are more people selling GDX than buying it. And it had gone up 100%. But I'm not talking 1 month, I'm talking consecutively for all of 2025. It's only been about the last month or two that it had net inflows. It had negative inflows. Nobody wants it. Even Wall Street analysts still, aren't ranking most of these gold miners as buys. They by the time they will come over in the sixth inning as well, because they don't really like it. What finally happens if you're an analyst is your boss pulls you aside and says, hey guys, my clients are bailing. They said we're stupid. Why are you saying that Newmont's not a buy? Why are you saying that Agnico Eagle's not a buy? Why are you saying that you don't have strong buys on them? These companies are outperforming everybody else on the S&P 500. What's wrong with you? And only then when they get admonished, right, and they get called before, because that fund manager doesn't want to get fired. He doesn't care if the analyst gets fired, but he doesn't want to get fired. And the analyst, he's trying to blame the analyst because the analyst is a spokesperson for the fund. So guys, if you understand the mechanics of Wall Street, the smart money always comes in early. I didn't discover this just yesterday. Mine came out of need. I went through the decade of the 90s working in high tech, making more money than I'd ever made in my life for that entire decade. Just, we went into that euphoria of 2000, the dot-com rah-rah, the last few years. And it was unbelievable. Stock incentives were up. The NASDAQ was at 5,000. I had a trader in New York. I used to listen to Waxy, Michael Parnas, and part-time when I had a few hours here or there, and Tiny in the trading room and all that stuff. And I was buying, FOMO things that I'd buy them one day and 2 days later I'd swing trade them. All kinds of things. I learned a lot. And I remember Michael Parnas saying, oh no, the NASDAQ's going to crash, get out. I'm like, this guy doesn't know. What's he talking about, right? I'm in high tech. I work in one of the biggest high tech companies, and I'm dealing with all the other high tech companies. I'm in business development, having conversation, joint partnerships. We're going to be fine. Was I wrong? Absolutely, I was wrong. Cost me a lot of money. I lost a lot of money. Stock, incentive stock that I had, all those options just disappeared in value, right? In that 2000 downturn. It took 15 years for the NASDAQ to get back to the 5,000 level. Went down 85 to 90%. And people realized that, all that FOMO about it's only eyeballs, it doesn't matter, the pets.com, all that crap. Well, it mattered eventually, and it always does. So real things. What happened after that dot-com bust? We had a commodity supercycle. I didn't know that immediately. I sat down. I also went through a divorce. I lost a lot of money on that. And I sat down and I said, oh my God, I want to retire early. I had all this money. I was counting on it, right? All this wealth. How can I rebuild that wealth? And I studied and studied and studied 6 months, 8 months, analyzed everything, looked everywhere. We didn't have AI, guys. It was a different era. The internet was there, but nowhere as sophisticated as here. But research. And I read this article about commodity super cycles, and I started studying. I looked at some historian people that had subscription-based material, and I sat down and I analyzed that. And I talked about civilizations and how all societies rise and decay from within, and about fiat currency. And I knew the stock market to a big degree, but I didn't know about the commodity. So I didn't know what the causes were. And I didn't understand exactly bubbles to that extent. You read about the tulips, you read about history. History is a great teacher, guys. So I sat down, I studied. Once I made a decision, I was there. They used to tease me in the office and all around the company when I traveled. But oh yeah, there's the gold bubble over there. And people ask me, how's gold doing? It's just doing great. It's going to go a lot higher, right? And most people chuckled and laughed and had fun with that, didn't you? Right? I just doubled down because I had a belief. And that was the best thing that I ever did. I did 12x return. Really got me back to where I was in that previous decade. Because not only did I take everything that I had and put in it, I also put everything that I was earning in. I was back single again. I just put all my money. I paid my alimony. I put it all into that. And it just went up and up and up and up. So it's a commitment. It's a process. Okay. I used all my option training from before to accelerate, to time my option trades, when to go in, how to sell puts when the stocks really dropped so that I didn't even get put it. I kept the premium and I bought more of the miners with that. I used every possible strategy. And so I have that all in my brain. I couldn't wait. I've been waiting for this for over 15 years from the last 2011 peak, right? For when this would come. And so what I did, I set in physical gold and physical silver and just set on. So I didn't ride a lot of the stock cycle. Sure, I got into, yield max and I got into high yields and I love Palantir. I got into that early. So I had some tech from all my background. But the real bulk of what I couldn't wait for is playing a commodity super cycle. And so I had my YouTube channel, and I didn't care so much about the YouTube, but I couldn't help but tell you guys the truth and just be honest on what's wrong with the high yield. It just won't work long term. If you want to jump around on funds and be in this one for 3 months and this one, that's a lot of work. Most of you already have work and you want to supplement your income, or you're retired and have enough money. You like collecting extra, but you don't have to have it. All right, guys. So that's it. It's long-winded. That's what I'm for. My rants, my stories. But I know that people, if you listen, it gives you a chance to understand how to take advantage of this. I'd like you on Patreon. If you never go to Patreon, and some people do, they send me an email and said, hey, Bruce, here's a tip, or here's this. I made so much money. I bought a bunch of miners. And when you put that video out in May and I'm up a bunch and I sold, so I'm happy. I can't make that person be a 5 or 6 year person. They may come back around. They probably will. But it's laid out there, guys. Nobody watched those videos. That's why I stopped. Thank you for not watching them, actually, because it made me go create a Patreon. I said, I want to build a community where that's all I do. And if I get no Patrons, I don't. I was shocked. I got like 50 people right away in Patreon. And somebody said, you're really good. You really understand that. We really like what you have to say. You're just one of a whole bunch of people out there on high yield stuff. We can go listen to the fanboys when the OMAX run it. Doesn't matter. They like you, don't like you. I'm just trying to tell you what it is, guys. And yes, there will be a few AI stocks that will soar. It's not going to die completely. It is the future. But it's going through a bubble at the moment. And it'll retrace. It'll get healthy. It'll get more real. It's like the .com. We didn't stop having online stores, right? But it recreates itself in a healthier way. And that's where we're headed with AI. Instead of just all the companies, 75, 80% of all the gains and all the money in the Mag 7 are all around the AI portion. That's the part that's going to get disrupted. All right, guys, I got to run. I'll let you go. Have a great one. Again, this is Bruce with Targeted Wealth Creation. This is not financial advice. I am not a financial advice. Look, if you want to be over in Patreon, www.patreon.com/TWC. Come around, check it out, guys. You're missing something if you don't. All right, guys, bye for now.